please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Almost halfway through the trading session, and what a day it has turned out to be so far. So after that initial dip that we saw in the market, we not just recovered, but we're trading at the high point of the day. I'm Sumaira Abdi, and with me Sonia and Lata. Good afternoon to both of you. Mine, of course, market and elections. So here's CNN News 18's Bhupendra Chaube, who tells us how the urban-rural vote gap has panned out.
The urban and rural divide. And we've just been trying to bring you up to speed with how Gujarat may have voted in two very different ways. The urban pockets of Gujarat, traditionally strongholds for the Bharatiya Janata Party, Surat, Baroda, Ahmedabad, completely awash with the BJP's colors. It's the BJP which is ahead. Small decline there, but they're at 42 seats. The Congress making gains, but not in comparison to a modified election machinery. And I think that if you look at what had happened in the campaign season during the last week of election campaign, when Narendra Modi simply changed the narrative, I think that question must be asked out of the Congress party, that did the Congress make a mistake by getting itself trapped in that whole Janeudhari business of Rahul Gandhi by trying to assert its own Hindu identity? Was that a mistake? Could the urban story of Gujarat also have been different for the Congress party? The rural story. What's the rural story for Gujarat looking like? And look at that. The BJP and Congress, even Stevens. The BJP and the Congress, despite movement of the Patidar castes, despite movement of Patidar community, the first generation community towards the Congress party, because the high vote base that the BJP starts at, the BJP has managed to hold on to its seats despite some slippage. The OBC factor. There was conventional wisdom. The BJP was very, very upbeat. Amit Shah, Arun Jaitley, everyone repeatedly said that because the Congress is indulging in this over-wooing of the Patidar community, the OBCs will end up consolidating around the Bharatiya Janata Party. Has it happened? Not really. The OBC community has been split between the BJP and the Congress. It's not as if it's been a one-way show. As far as the first generation voters are concerned, yes, they've shown an inclination to move towards the Congress party, away from the BJP, not necessarily the case of OBC.
Oh yes, so that's the rural-urban vote. A word on the markets and the way we've performed in the first 3 hours. The market did, of course, survive a major hiccup around 9:30 when it looked like it would be neck and neck in the state of Gujarat between the Congress and the BJP. But with things stabilizing now, the markets, of course, have pushed the wicks down and pole vaulted to kind of almost breaking the near-term range. But it's still unsure whether the market will be able to break the 10,490 jinx just yet. It could well happen in the last hour of trade today when what are now leads become actual results. Perhaps the market's just waiting for that bit of uncertainty to get out of the way, since, the two parties, leading parties, Congress and BJP, have been kind of gyrating between 103 and 106, the BJP and the Congress between 72 and probably 76 for a goodish bit now. So one would want to see how the final tally is and whether it's markedly different. And then you could perhaps see the index pole vaulting towards the 10,500 mark if the result is somewhat different from the kind of finish we are seeing at this point in time. But after that, it looks like the market will get back to normalcy. The other point to note about the markets today is that we have a huge global tailwind going for us. Let's pick up all the Asian indices, and Wall Street, of course, the near passing of the tax bill in the United States sent Wall Street to fresh highs on Friday, and most of the Asian markets, and most importantly the metal stocks, have all been headed higher. That's the performance, 1.5% on the Nikkei and about 0.9 on the Hang Seng. So actually, with a tailwind like the Gujarat elections behind us, we are performing as good as the Hang Seng index. So that's a point we need to take home, that we also have a lot of global tailwind going in our favor, as well as the metal stocks. Maybe if you can pull up some of the metal numbers, especially on the MCX. Metal stocks, metal prices globally doing well, Shanghai metals doing well, are also giving a major tailwind to Tata Steel, Vedant and Hindalco. With that, it's over to the other movers and shakers, Sonia.
Oh yes, in fact, plenty of stocks to talk about. I just want to mention that a lot of stocks are hitting new highs today, whether it's names like HUL, TVS Motor, Maruti, Page Industries, all sitting on fresh highs. Good time to take you through some of the buzzing names today. Ekta joins in. She's going to tell us why she's watching Orchid Pharma this afternoon. Ekta, over to you.
Well, Orchid Pharma is buzzing on reports that it could be on the block, and the likes of Aurobindo and Dr. Reddy's could be in the front runners in order to buy the company. Now, we do understand that there were 7 to 8 odd companies that have been bidding as per reports, and including some private equity firms, and these two have come on the top. Now, remember that it's traditionally been an API and injectables manufacturer, and it really hasn't had any sort of US FDA issues which have stood out. They have around 2 API plants in India and 3 to 4 formulation plants in India as well, which are UK as well as US FDA approved. Now, interestingly, this case has been referred by one of the banks to the NCLT, and they have around 3,500 crores of debt or thereabout, with the consortium really being led by State Bank of India, and hence the bidding process for Orchid Pharmaceuticals.
All right, Ekta, thanks very much for that. Future Supply, that had a tepid listing in trade today. Mangalam, what more can you tell us about it?
That's absolutely right, Sumaira. So, this issue price was 664. The stock is currently trading at around 680, 681 off the high point of the day. And that's primarily because not a lot was left on the table in terms of valuation. So, at current levels, the stock trades at around, 30.5 times FY19 earnings. That's because most of the street assumes about a 90 to 100 crore net profit in FY19 itself. And that's absolutely in line with what Mahindra Logistics a couple of weeks ago was offered. And even if you take a look at all the other peers, you have a couple of the stocks, the likes of VRL, Gati, all of them trading at lower valuations than Future Supply itself. That said, a lot of the people are also looking at the positives, the fact that it's India's largest third-party logistics company, has the highest margins in the industry, and with the Mihan capex coming in this year itself, the future prospects look fairly bright for the company itself. However, there are a couple of concerns. The first one is a large proportion, nearly 70% of the revenue comes from the group itself. So we need to see whether this dependence on the group lessons are not going ahead. And the second, the working capital days, they've been at around that 85 days as of the first half of this year. Let's see whether they can reduce that or not as well. The management had spoken to CNBC TV18, spoken about their focus on margins and the customers itself.
Okay, yes, in fact, I think we can go across to Rakesh Biyani, the chairman of Future Supply Chain Solutions. As Mangalam said, he spoke about margins, and in fact, he expects the margins to improve in the near future. Listen in.
We definitely see there's an opportunity to expand the margin in the near term. And I also believe the fact that, the way the kind of order volumes are expected to be over the next few years, a lot of the margin model that we have today is quite sustainable. And what we need to keep in mind the fact that we are a differentiated business. We are in the consumption sector largely, and we definitely have adopted a lot of technology over the years to ensure the fact that we run the business in a very efficient manner, which sort of sustains the margin model that we have.
Okay, those were optimistic words from Rakesh Biyani. The other stock that's on our radar is Adani Enterprises. News not looking too good, as Anisha will just tell you, but the stock couldn't care less today. It's, of course, coasting on higher and higher on the Gujarat wave. But Anisha, tell us.
Well, yes, as you rightly mentioned, the Adani Group stocks have been very volatile as the market has been. But the stocks, as you mentioned, are struggling that off given the negative news, and not only moving to the Gujarat election news, because if you look at the news, it suggests that Downer EDI, which was the company that Adani Enterprises had got into a contract with to develop and operate the Carmichael mine project in Australia, has backed down, and that contract is now void because Downer is not willing to go ahead with the project, given that Adani Group has not been able to get the funding for this project. Remember, the government there, the Australian government, had vetoed against the Northern Australian fund giving the loans for this particular project. The Chinese lenders as well had raised their hand and said that we are not going to participate in this particular project. And now we understand that this company has also backed out. So things not looking too good for the company. Of course, time and again, they have said that they're committed to the project. But let's see how they complete this project, because the road just gets more difficult for them. Back to you.
Okay. Thank you very much for that, Anisha. But really today the toast of the morning is not just the metal stocks or the Adani Group stocks, but the PSU bank stocks, and in fact most of the finance stocks, but PSU banks absolutely stand out. Punjab National Bank 4.7%, Union Bank 3.7%. It's a roaring day, and well, some credit to the news that Sapna broke for us. Sapna, tell us some initial timetable of and quantum of the recap bonds is available?
Yeah, that's what we understand is around 60 to 70,000 crores at the minimum, because government is very clearly indicated it's going to be front-loaded, and they're doing it in the supplementary writer. So anytime within a few minutes, we're expecting Finance Minister Mr. Arun Jaitley to table the supplementary demands for grants in Lok Sabha. After that, it will be done in Rajya Sabha. So we'll have the quantum of the first tranche of recap bonds, most likely. That's what the indications are very clearly from the last 3-4 days. Second, there was another aspect. There was an expectation that some additional cash outgo will also be made available for PSB recap. Now, that is something that we have to watch out for.
Okay, thank you very much. I know, Sapna, you're gathering news at a breathless pace. Thank you very much for joining us. But Punjab National Bank obviously higher because next to State Bank of India, it is the largest bank, and it is expected, of course, that with the kind of improvement it has shown, or the decline it has shown in its NPLs, it would be a very good candidate for additional capitalization. And then we have got the other big banks, Canara, Union, Bank of India, all of them as well charging higher, because in the first tranche of recap bonds, there is a very good chance. Of course, Indian Bank, I shouldn't forget, it is the least in terms of NPL. So you're seeing those very stocks charging higher. The markets just climbed a little more in the last few minutes. Okay, we saw it go towards that 1% gain, the Nifty, that is moving towards 10,430. But it's just taking its time, probably waiting for the leads to get converted into seats. And that should happen perhaps in an hour or two. There is an Amit Shah press conference scheduled at 2:30. So clearly by then we should have most of the leads converted into seats. So markets just waiting by, but it does look like a trending upward day, provided you don't count, of course, the first few moments of heart attack that the market went through. Otherwise, it's been a steadily upward climbing day. People who bought any time in that dip, even at the end of the dip, would still be making money, and that would be positive. With that, let's move to stocks which are in the news. We told you that JMC Projects is in the news after it secured orders worth 790 crores in terms of irrigation and civil construction. We are joined at the moment by Mr. Tulsian, who heads that company. Mr. Tulsian, what more details can you tell us? Where did the 790 crore of orders come from? And what kind of margins do they typically bring?
Hi, Lata. Good afternoon. So, as we declared, around 400-450 crore of this order book is from the water projects, which has one water pipeline project and one irrigation project. And this is in line with our strategy of growing our order book on water pipeline business. And the rest of it is from civil construction, mainly commercial. In terms of margin, they are in line with our trend of margin, which is going on, which is around 10% right now, as we don't want to any further reduce our, margin run rate. We have come out of a very difficult time in the last 3-4 years in terms of margin protection, and with a lot of internal discipline and, process improvements, we have been able to reach a threshold of around 10%. So these bids are in line with the same margin profile.
Mr. Tulsian, good afternoon, sir. You've also mentioned that you will now be exceeding your revenue guidance for FY18. So it already stood at 15-20%. What might we expect now?
Well, initially at the beginning of the year, we had said around 15%, but we are already at around 19 to 20% this year, and we think we are very much on the target of doing 20% for the year.
So 20% for the year is the revenue guidance. Can you tell us a little bit more about the order book? What does the consolidated order book stand at now? And what are the latest projects that you have within the water infrastructure space?
So we have now a total order book of around 7,000 crores.
Okay.
In which our order book from water projects are, including these ones which we have declared recently, is close to around 900 crores. Which has one international project also, which is in Colombo, a first one, a small one. And other than that, the total infra book now is close to around 25% of our order book.
Okay.
And the rest of it is from buildings.
Okay. Mr. Tulsian, what is your total debt?
The debt at the standalone level right now is close to around 800 crores.
Okay.
It has gone up also because of post the GST implementation, as most of the contracts has to be amended, and because of which, especially with the government agencies, they are taking time to amend the orders, and because of that, there is some money which has been on hold. And at the console level, we are now close to around 2,000 crore of debt.
Okay, and therefore, what will the monthly interest outgo looks like? See, in spite of falling interest rates, your interest outgo appears that at the end of this year will be about a good 15-20% higher than last year.
No, Lata, that is not the case. This year's interest cost would be in line with last year at the standalone level, if not less. And at the console level, it will be slightly lower than the previous year.
Okay. Can you indicate by how much? I thought last year standalone it was 84 crores. This year,
so
you not? Achha, this year you may be more like 84 crores?
We should be around that number, plus or minus 1 or 2 crores.
Okay, fine.
Mr. Tulsian, wanted to speak a little bit about this building segment, since it's about 75% of your revenues. What's the situation now on the ground? Because we were hearing that there's some bit of green shoots in the residential real estate market. What's your own experience? And also given that you're more tilted towards the private players, has there been some uptake in terms of inquiries, etc.?
See, we in the last 3-4 years, actually, we have become very cautious in terms of picking up the building side orders. And today we only work with the best of the developers in the country. And we do a very strong internal financial due diligence before we select any new client. So in any case, we are very cautious, and that's why you will see that, even our order booking on a year-to-year basis has been slightly muted in terms that it actually aligns to our growth strategy of 15 to 20%.
So are you seeing any incremental orders from the government side? I mean, you spoke about private orders, but from the government end, overall, is there any pickup?
Yes, there has been a pickup, and that's why I think our strategy of, consolidating on the private side in last 3-4 years in terms of only going for the A-class developers helped us because there were orders which we were also able to build up from the government side. So if you look at the numbers, past numbers, you will see that there was a time when our private book was almost 80% and the government book was only 20%.
Okay.
Today, our private book is 60% and the government book is 40%.
Okay. All right. We'll have to leave it at that. Manoj Tulsian, thank you very much for joining us with those details. Well, we must pull up those flashes that were just flashing for you. This is the government seeking parliamentary nod to spend a net extra of 33,400 crore. This is actually government nod to spend a gross of 66,100, but probably some of it will be met by either additional revenues or maybe cash drawals of the next year. The important point is this 33,400 crore, does it tantamount to an increase in fiscal deficit is what we want to know. These are just statements that we are getting from the government, and therefore difficult to make a full and final call. But that could be the quantum of extra borrowals from the market. That's how the market went. Maybe we should pull up the bond prices and see whether the bonds are reacting to this news. Seeking additional expenditure permission would normally mean that we will meet it, especially when it's a net figure, would normally mean that this is extra government borrowing. The markets are not doing anything at this point in time, but we will have to wait and see.
There's also an additional 4,800 crores for Narega that the government is seeking a parliament nod for. So that's some incremental news that we're getting. But is this figure something that the market doesn't know? The net extra 33,000 crores, Lata?
Well, it's difficult to say. I mean, the market has not yet reacted. So they could even be happy that it is only 33,000 crore and that doesn't amount to a great deal. It's about 0.2% of the GDP or something. Unless it's a 1.5 lakh crore, that would be about 1% of GDP. if you've got getting it at 0.2% of GDP more, maybe the market is able to take it in its stride, and that's why you're not seeing it jump about. Maybe this was always in the price. A 3.2% fiscal deficit would probably have been 3.4%. Maybe that was always expected. We don't know. But the market at the moment is not acting, is not reacting very negatively to this number. The only thing I can say at this point in time is perhaps this may not translate into borrowing. Maybe this will be managed without borrowing, probably contingent expenses, or it has to be managed with borrowing, but the market is happy that it is 33,000 crores and not closer to probably 40 or 50,000 crores that they were penciling in. But at the moment, the bond markets at least are sanguine, even if this means higher borrowing. In a bit, we will get you some more analysts and economists to react to this number, but at the moment the bond markets are taking it with equanimity.
Okay, so the government was, I guess, they have been indicating that they could meet the fiscal deficit target for the full year at 3.2% of GDP. So we need to see what this number is, whether it's a new number or whether it's baked into this estimate of meeting the fiscal deficit target. That's something that we'll have to get from an economist. But for now, these are the latest things coming in.
Chances are, I mean, this is of course the market making its own wild speculative guesses. It will be very much in the government's interest to push up the current borrowing to 3.4 without too much of rustling of the market, simply because now you can see the yields rising a bit. They've gone up to 7.161. They were at 1.5 a little while ago. It could be to the government's advantage to push it to 3.4 so that next year you can show a number of 3.1. Now, if you actually achieve 3.2 or ensure that 3.2 figure on the budget papers, then next year to show a genuine fiscal consolidation, you have to push it down to 3 or below 3, which could be a tall ask. And especially at a time when tax revenues are somewhat nebulous and unpredictable because of the GST. So it may be to the government's advantage to call a 3.4 in the current year so that you can do a 3.1, and that will look like a substantial recovery or substantial improvement in the government's fiscal consolidation timetable. Market not reacting very negatively. It's hardly 1 basis point. Well, let's just get the election tally in. I think I saw a number 101. Well, markets will gyrate, of course, with what numbers we are getting from the pollsters. Okay, now it's 102.77 at this point in time. Congress just inched a little higher, but these are still, remember, leads and not final seats. We'll have to wait and see how the final tally looks like, and that could make a difference. The market is gaining at this point in time, almost moving to a 1% victory. 10,431 is scaled, and I think that's the highest point in the day. We just got news that the Parliament may seek permission from the Parliament to spend 33,000 crores more. That is net, a gross of 66,000 crore, but a net spend of 33,400 crore more. Aditi Nair, the chief economist from ICRA, joins in. Aditi, how should we interpret this statement to mean extra borrowing?
Thanks, Tata. Well, maybe, maybe not. Actually, net cash outgo of 33,000 crore is not insignificant, but maybe there could still be rooms for cut somewhere else. So I think that's something that we will not know just by looking at this net cash outgo number. My understanding is that the net cash outgo number would be for fresh spending versus spending that's being surrendered within a particular department. But that doesn't mean that there aren't other departments where they are not able to find some funds that had been allocated earlier, which don't look likely to be spent now. So it still may be a net number of less than 33,000. We had estimated earlier that in any case, looking at the first 7 months of the year, revenue expenditure would have ceased to expand by 7.5% or so in the last 5 months, but capex would have to contract by 9.3%. So not really clear where that extra spending room would be.
Fair point. Thank you very much, Aditi, for joining us, because the bond markets have not reacted very negatively, just about 1 basis point higher. Vivek Rajpal of Nomura joins in. Vivek, we have just 2 statements from the government that they will ask permission to spend a gross 66,100 crores more and a net 33,400 crores more. Should we understand that as market borrowing? We've seen the yield just pick up by 1 basis point.
Right. So I think there are two aspects. First of all, we have to see if really it's the fiscal which will widen or not. And then there is a second part to it, which is how will they finance the extra need. I mean, we can always have a case where there is no additional borrowing and there are other sources of funds that come in, like small savings, etc. So it's understandable that bond markets have responded in a muted fashion. I also would like to note that that to certain extent negativity is in the price, in the sense that I think market's base case is that on the fiscal front, government will slip. So and hence I'm just trying to explain the market reaction to you.
Okay, yeah, that point is taken, Vivek, because that anyway that issues like the tax revenue is quite uncertain, and even with respect to spectrum, the revenues are not much. So I guess the market is already priced in a lot of the pressure that we're going to see on the FISC. So this may not come as a negative surprise, as you rightly pointed out. But thanks so much for joining us.